Hello and welcome, everyone. I am your host, Riley Roseby, the man behind Godspeed, your navigator into this AI-infused paradigm shift that we are going into. On today's program of Godspeed, we're going to be talking about Tesla earnings. But before we get into that, I want to give a huge shout out to Louis over at All-Star Charts Crypto. Louis has been absolutely killing it. Crypto is nearly at $4 trillion market cap. Bitcoin is making new all-time highs. ETH has been on an absolutely massive tear, and Louis has been all over it. So I know we included a link to one of Louis' latest posts in the description below. Be sure to check that out if you're in the crypto game. Let's get into Tesla, though, because this is the earnings report of this earnings season. Right? The numbers aren't necessarily what we're focused on, but we want to see the stock's reaction. We want to kind of gauge the sentiment around Wall Street as far as Tesla goes. But I want to get into the executive summary from the company today. And I'm going to just go ahead and read it over to y'all so we can kind of all digest this together. It says, Q2 2025 was a seminal point in Tesla's history, the beginning of our transition from leading the electric vehicle and renewable energy industries to also becoming a leader in AI, robotics, and related services. Our first robotaxi service launched in Austin in June. While the service is limited in initial scope, we believe our approach to autonomy, a camera-only architecture with neural networks trained on data from our global fleet of millions of vehicles, allows us to continually improve safely, rapidly scale the network, and improve profitability. We continue to expand our vehicle offering, including first builds of more affordable models in June, with volume production planned for the second half of 2025. Additionally, we continue development of the Semi and Cybercab, both slated for volume production in 2026. The energy business is more critical than ever. The availability of clean, reliable energy is necessary for economic growth and an imperative for the development and commercialization of AI-enabled products and services. As electricity demand grows, our Megapack product helps to increase utilization of existing generation and transmission capacity, resulting in a more traditional fossil fuel generation assets, and can be deployed 4 times faster than traditional fossil fuel plants of the same capacity. Trailing 12-month energy storage deployments achieved their 12th consecutive quarterly record, despite a sustained uncertain macroeconomic environment resulting from shifting tariffs, unclear impacts from changes to fiscal policy, and political sentiment. We continue to make high-value investments in CapEx and R&D while ensuring a strong balance sheet. Our priorities remain the same: delivering affordable, compelling, autonomy-capable models that maximize our global fleet of vehicles as our autonomy software continues to rapidly progress, growing the energy business and advancing our robotic efforts. So that was a lot. That was a lot. I want to touch on a few things, though. Robots, autonomous mobility, and energy. These are the 3 pillars. We're also talking about communication when we talk about the 4 pillars of a paradigm shift, but Tesla is knocking out 3 of them. Elon is a really interesting guy to watch. Not only is he controlling Tesla, he's controlling SpaceX, Starlink, The Boring Company, XAI, Twitter, whatever you want to call it. We got to keep an eye on this guy. So focus on Tesla. We're looking at autonomous mobility, right? This is the new endeavor. Last week in the ETF of the week, we talked about electric and autonomous vehicles. This is still the same theme. These themes are not going anywhere. Like, you guys might get tired of me continuing to talk about autonomous mobility, but like, we're going to be talking about Waymo till maybe 2030. Who knows how long this is going to take to fully scale and just become ubiquitous with everyday life. But this chart here, pulled directly off of Tesla's shareholder deck. This is cumulative miles driven with full self-driving in the billions. So we're at over 4.5 billion miles driven using Tesla's supervised full self-driving. Now, why is this important? Because Tesla's approach to autonomous mobility is through vision and sensors. They're not doing LiDAR like Waymo. And so they need to collect all this data. Tesla's just a data company at this point to launch this autonomous service. So they need to collect all the data, and they have 4.5 billion miles logged so far. And folks, this number is only increasing every single day. That's something that I remind myself constantly, is that today, as of right now, AI, autonomous driving, nuclear reactors, everything that we're talking about is the worst it's ever going to be at this very moment in time. It's only going to get better. So why is Tesla so critical? Well, Tesla's not just a car company. This is the entire Tesla ecosystem right here. They're in trucking, robots, AI compute, industrial batteries, manufacturing, solar, home batteries, home charging, electric vehicles, robo-taxis, the charging network. The list goes on and on. Elon's goal here is to integrate Tesla into the entire society. And you got to tip your hat to the guy. Love him or hate him, you got to tip your hat to the guy, because this man is absolutely killing it. And I'm not sure if you guys saw in the news, but the company opened a diner in Hollywood, California. So we are getting these retro kind of vintage vibes from Elon and co. And I really like us leaning into that Art Deco theme. I'm a big fan. The Chrysler Building in New York is by far my favorite skyscraper. So, you know, I'm a big proponent of the Art Deco vibes. And then the elephant in the room, the robo taxis. We've deployed in Austin. You know, we're starting off in Texas, and there is news that the company now, even just today, reached out to legislators in Nevada to get its robo taxi service up and running. Similar to Austin, the California, Arizona, and Nevada markets will all start small. They'll be supervised. This is a marathon, not a sprint, right? Doesn't the tortoise always win in the end? But this is the chart we're watching, folks. We're waiting to see an expansion in volatility in either direction from Tesla. This is, in my mind, the most critical chart of this entire theme that we're watching. I talked about this at the very beginning of the year. If you want to go into the archive on Godspeed, you'll see it was one of the first few posts I went through, 150 charts. I said it. Tesla is the key figure to watch for this entire trend, because they have their hands in so many different things. If this chart follows the direction of the underlying trend and resolves higher, you know, this AI paradigm shift is only going to accelerate. So my bet is on that very move, that we are going to get a next leg higher in Tesla, for the sheer fact that they are integrating in all of these areas that are experiencing this hyper growth. So unless the company just falls apart, completely goes by the wayside, I don't see this company not succeeding. The number I pointed out to, the figure, the level, whatever we want to call it, in Monday's post, talking about accumulate and wait if Tesla is above 288. And why do I pick this number? Well, this was a pivot point that we've seen multiple times, and I love it when we have these figures that just keep getting knocked on. So for many months, many years, this 288 figure acted as resistance. A little bit of support here in end of 21, early 22, but for the most part, this 288 level acted as resistance. And then recently we acted as support. This is the figure that you want to be betting against. If Tesla goes below 288, all bets are off. You probably don't want to keep accumulating. You probably don't even want to hold the asset, because the opportunity cost in holding a stock that's going nowhere is significant. So 288 is our level. And if Tesla continues to hang out above that, you got to just be accumulating. You just got to be waiting and waiting for that opportunity to press the gas, pedal to the metal. And I know we're talking about autonomous driving here, but like, you guys all know the moment to press the gas. So here's a little bit more granular look. This is the daily chart. And as far as I know, I haven't checked the price since we started recording, so I don't know fully, but Tesla was basically flat after hours. It had a little pop, little dip, kind of right back to where it closed. Tomorrow's going to tell a lot. The pros own the close, so don't be too eager to jump into this name if you see a move in those first 10, 15, 30 minutes. Let this name dance. I put out a tweet that's saying patience will pay on this Tesla play, and we need to be patient here. These are kind of the price targets we're looking at. And I'm not a huge fan of price targets for the sheer reason that nobody has a crystal ball. But we know laws of nature apply in everything, and that includes markets. Fibonacci ratios are great tools when kind of looking for these upside targets. I know JC uses them a lot. He was the guy that showed me to them. And the more I learn in my own capacity, I'm reading this book about sacred geometry, like these Fibonacci ratios pop up everywhere. So there's no reason why we shouldn't be using them just as a guide, just as a kind of a signpost as to where this move will go. And we have some pretty incredible risk reward opportunities because at the end of the day, that is our job. Our job is to take advantage of risk reward opportunities that are heavily weighed in our favor. And how do we do that? We stack layers of probability. We look for time frame continuity, and we pick our entry points. I highlighted a lot of this in my blog post on Monday. If you guys haven't taken a look at it, I highly suggest you check it out. Please give me some feedback too. Shoot me an email, write me on Twitter, something. I'm open to all feedback, and I really like kind of where this narrative is going. So let's break down these targets. The first target would be a 5-to-1 risk reward. This is how I learned it. When you're placing trades, when you're placing swing trades, you want to achieve a 5-to-1 risk reward ratio. Why is that? Because you can be wrong 80% of the time and break even if you hit that 5-to-1 on that fifth attempt. So that's really important. We're not going to be right 100% of the time. A lot of the time, some names I'm going to be talking about, they're not going to go straight up. And that's okay because this is a math game. It's all about the numbers. But here we could take a look. That first Fibonacci extension, the 1.618 extension, gets Tesla to 727. Target number 3, that 2.618 extension, gets us to 1,110. Now, are these numbers guaranteed? Absolutely not. But with a base like this, we shouldn't be looking for Tesla to just take $500. We should be accumulating and positioning ourselves to take advantage of a major move, because Tesla is the stock that moves significantly. When it goes, we all know it's a meme stock. It was kind of the original meme stock. I used to work for a gentleman. He had a huge short position on Tesla, and he tried to look at the fundamentals and kind of make his case. But deep down, the biggest reason he was short is he just didn't like the story. This stock has that it factor to it. It creates headlines. It creates stories. It's going to be controversial. You don't think if this stock has a 15, 20% day, people aren't going to be screaming from the rooftops that like Elon's the worst person in the world? That's of course exactly what's going to happen. So we need to know that going into it, which is why it is so critical to position yourself kind of with maybe a feeler position so that you don't get whipsawed by the volatility until this thing has a super clean breakout. And be ready for when it does break out, because when this name goes, folks, it goes. So I want to highlight one more chart kind of on this autonomous theme. This was the ETF of the week last week. I am finishing up the post for today's ETF of the week, and I'll be sharing that shortly. But I just want to take a look at this chart because this is in that same theme, that same vein as Tesla, right? Autonomous and electric vehicles. This is the DRIVE ETF, DRIV. This thing is up 2.5% so far this week. Regardless of how Tesla performs tomorrow, this trend of autonomous mobility is still intact. Like this trend is not going to go away if Tesla dumps 3, 4, 5% tomorrow. You know, we're going to reevaluate our process for sure. If it breaks below 288, we're going to go back to the drawing board. But this ETF is a great heuristic as to where the underlying trend is. And I really want to kind of make a point of this for most folks. If you don't want to be an active trader, you should just be accumulating ETFs. And I really like these thematic ETFs because it lets you kind of get that active feel. You're participating, you know, you're placing a little bit of a bet. You're taking a little bit of a stance. So it feels like you're in on the action, but you avoid that single stock risk. And that is so critical when playing the long game and investing because it's about longevity. So removing that single stock risk by using ETFs, it's a great strategy, right? What do they say? Time in the market beats timing the market. We can all have fun timing the market. Now, I got a mystery chart for you. And this chart, I will go ahead and unveil in today's post, the ETF of the week. I'll kind of break it down. Be sure to subscribe to Godspeed. There's a link there in the YouTube description, and you'll get to know what this mystery chart is. I kind of hinted on it a little bit today. It's not strictly autonomous driving. It's not strictly Tesla. I'm giving some hints already, but let's move on. I'm going to leave you guys with this because I don't want to make too much of these Tesla numbers. I don't want to overthink this. I don't want to dive too granular into the revenue figures because they're going to keep printing. And our job as investors is to wait until the moment is right. And maybe this earnings catalyst is that moment. But I love the analogy of riding a wave as far as investing in markets, right? We can't control the wave. We can't control the market, but we can control the board and how we ride the wave and how we position ourselves. I think this is a really important lesson for all of us to learn. Maybe put it into practice. Folks, that is all I have for today. Tomorrow, when Tesla opens, I suggest just sit on your hands for the first 15 minutes. Like literally do nothing. Stare at the market if you have to, but don't be too eager to get in following this earnings report. Nothing crazy has changed. The numbers came out great. There's going to be some repositioning by the institutional investors. That's great. Sit on your hands and wait. Let that clean trend present itself. And I'll be sure to tell you guys when it's happening. That's my job. That's why I'm here. I'm your navigator. Folks, be well and happy trading.